Just always appreciate us coming together and the partnership we have with industry to talk about substantive policy issues and legislative issues and all of the different points of cooperation that we have. Uh, Brian started these meetings not very long ago, and I feel like they've been really productive due to your participation, and really a credit to his team to get this started, and you all for joining and engaging with us in a really meaningful way on the day-to-day issues we see in property casualty. And I think there's some things on the agenda today that are a bigger picture or kind of future oriented, and things maybe Oregon has seen in other states but haven't quite made its way to Oregon yet. And always value your candid perspective to those things as we work through, whether it's wildfires or different legislative concepts we have, all of the things that come to us as questions from consumer advocates or internal staff or other carriers. So won't take up any more time. I'll turn it back over to Michael, you to lead us through the slide deck, and good to see everyone.
Thank you, TK. I will proceed to our first topic of discussion today, which relates to intentional acts. And this is going to be two-part. I'm going to go into some trends that I have been noticing as a rates and forms analyst on the forms side of filings that we have received in recent months. And then Raven Collins will present some policy updates in relation to intentional acts. So a couple trends in recent months that I have discovered is that in some personal lines policies, there are an awful lot of references to the expressions "an insured" and "any insured." And we do make the distinction between "an insured" and "the insured" per our bulletin, DFR 2022-2. When we see the expression "an insured" or "any insured" on a personal lines policy, we will be questioning that and requesting information about what options will exist for innocent policyholders. We are looking for language in intentional acts exclusions that communicates that any exclusion for intentional acts is going to be from the standpoint of that specific policyholder. We do sometimes see language saying, a reasonable person position, and other positions, but we're really our expectation is that the exclusion be related to that specific individual who's being denied coverage. In recent months, we've noticed the trend of the expression "an insured" and "any insured" quite a bit. So just a general reminder, if you're sticking with, if you have a personal lines policy, we do want it to be insured specific. So just something I thought I would mention to keep in mind. And at this time, I'll go ahead and turn it over to Raven.
All right, thanks, Michael. Hi, everybody. Good to be here today. So like Michael had mentioned, as everyone well knows, DFR had received form filings that kind of applied a more expansive language to intentional acts exclusions over the years. So we did publish the bulletin, and Cassie Susie has led the division's rulemaking efforts to clarify the application of those exclusions to co-insureds within P&C personal lines. The intent is to strengthen consumer protections by requiring clear language used in policy forms describing an intentional acts exclusion, and to prohibit the denial of coverage for a named co-insured who does not cause, does not contribute to, and is not aware of the intentional act before it is committed. So a public hearing was held on December 15th, 2022, and several oral and written comments were collected. The rule is going through the process and will likely be implemented next month, I believe, on March 1st. This won't really require any additional changes from insurers because the majority are in and have been in compliance with the bulletin for quite some time now. So that is the policy update on that. Any questions? All right. Oh, Michael Smith.
Doing some policy reviews myself recently in some other states, and curious, is when you say a co-insured, is that referring to like another person covered by the policy directly, like in the same household, or is that referring to like uninsured or third-party coverages? And obviously, if I do an intentional act and injure a third party, I'd expect to be liable. But if the husband deliberately destroys the car or destroys his wife's car, does that mean that we will cover it because it was her property and not the husband's property?
Yeah, that's a good example of it, is the husband and the wife, or the family member. It's somebody who is on the policy themselves.
So if I was to destroy my son's car, the fact that I did it intentionally doesn't matter. He would still have coverage under the policy.
It depends on a lot of circumstances, but it could potentially have that result.
Okay, thank you. I was just curious.
Oh, sure. Kenton, I see your hand up.
Hey, thank you. So as we have talked about the intentional acts bulletin and the innocent co-insured rule, I know we've recorded our concerns previously, the trades have, but we've also had some inquiries from insurers similar to kind of what we just heard from Mr. Smith. I'm wondering, I think when we talked about the innocent co-insured, either the rule or one of the two regulatory activities, we talked about the possibility that the division might be able to develop like an FAQ document or some guidance, some additional guidance that maybe it doesn't take the shape of a bulletin exactly, but provides insurers with some questions to help provide just a little bit more guidance around how they should be drafting this policy language. And with member companies about kind of the timing of if they already have filings in and they've been approved previously, to look at those, and just sort of things around the interplay between the bulletin and the rule. So if there's a way for the division to consider either maybe seeking additional questions, maybe not so much comments on the rule or the bulletin, since we've kind of been through that already, but like, what questions do insurers have to help them be in compliance with the rule and the bulletin? And then some effort by the division then to respond to those questions with like an FAQ or something like that.
I can take that question.
Thanks, Cassie. Go ahead.
Just to jump right in. Hi, everyone. My name is Cassie Susi. I am a senior policy advisor with the division. Kenton, I think it would be helpful if you and some of the other trades can gather any questions that insurers are having around implementation of the bulletin and also the forthcoming rule. I'm not aware of what those questions would be, but I think we would be happy to work with you all in trying to provide guidance. One of the things I will mention is, at this point, in terms of compliance with that, my understanding is the vast majority of the market has updated forms and whatnot. And so I think we're in a good spot, but if there are still outstanding questions, we would like to hear those. In terms of the interplay between the rule and the bulletin, I don't think much will change based on those two documents together. That current state is good to go. But I see TK has his hand up if he wants to jump in.
Yeah, just to build a bit on what Cassie said. Also like to note that Brian and the form filing team is more than happy to work individually with any carrier. It does not need to come through like in a generalized forum if there's a one-on-one issue. But I just reiterate what Cassie says. We've looked at the language pretty comprehensively. I don't think Brian probably has the best perspective to this, but I don't know that there's anybody at this point who we've deemed out of compliance, but it's certainly a point of follow-up. And I think that that team can help any questions folks have. Thanks.
Thank you. We'll do a quick check with our members to see if there are additional specific questions that we're seeing more than once. If carriers have individual issues, of course, they can approach you on their own. But if we are seeing the same question come up over and over again, maybe that's the kind of thing we can put forward to the division.
You're not asleep.
Great, thanks Kenton and Cassie and TK. I see one more hand up, Laurencia. Just go ahead.
Thank you. So in regards to the intentional acts rule hearing, and you stated that more than likely it should be approved in March. Do you have like a rule number or something that would correspond to?
Yes, I believe that we do. I don't actually have that in front of me. Let's see, I'm wondering, Cassie, do you happen to have that on hand? Or,
It's
see.
gonna take a little bit to dig and find it, but we can make sure to drop that into the chat when we have that. It is a
Okay.
new, it's a new rule, so it will be in an, its own new spot within our rules. So I can give you that for right now, and we can make sure that everyone has the proposed rules that went out for public notice.
Thank you.
Okay, thank you both. Any other questions? Okay, well, moving on to a brief legislative update. So we are tracking a very large number of bills, so I'm just going to mention a small portion of our higher priority items. So we have House Bill 2985, directing DCBS to establish a prescribed fire liability pilot program and either administer the program or authorize the Oregon Guarantee Association to administer the program. We are still waiting on an amendment for this bill that might substantially change the language that's been introduced, so we are tracking that one. House Bill 2052 is the Department of Justice's data broker transparency bill. It requires that entities that meet the definition of data broker have to register with DCBS, and that all data brokers be listed on a public-facing website. The data broker registry may be used by consumers who want to exercise the data rights given to them under Senate Bill 619. So I'll jump down to that. That is the DOJ's Consumer Privacy Bill, which gives Oregonians the ability to access, correct, delete, and take other actions with regard to certain personal data processed by specific entities that either conduct business in Oregon or provide products or services to Oregon residents. Next on the list is House Bill 2449. Prohibits insurers from canceling or raising premiums on fire insurance policies by more than 3% if the insured's property is located within the wildland-urban interface, or the insured's primary employment or economic or business activity is farming or resource extraction. House Bill 2920 directs insurers to consider only specified information in determining rates for motor vehicle liability insurance. This is not our agency bill, although it is very similar. This one is sponsored by Representative Nelson. And then we have House Bill 2982, requiring insurers to offer 70% of coverage that the insured has previously purchased for contents of their residence to the insured without requiring an inventory if the total loss of contents occurs as the result of a major disaster. And finally, we have House Bill 2587, which undoes certain provisions of Senate Bill 762 from 2021. So that's just a quick snapshot of some of the ones that we are tracking. And we just wanted to make sure that everyone was aware of those in particular. Are there any questions about legislation? Okay, yeah, there's more to come on all of those as well as our agency bills. So we'll be sharing more information about those as it becomes available. So I will pass it over to Spencer to take the next topic. Thanks a lot.
Thanks, Raven. And hey, everyone, Spencer Peacock. I'm part of the Division of Financial Regulations Business Analytics team. My comments today are going to be fairly brief and happy to take any questions you have. Also happy if you want to send me an email. I know our contact information is at the end of this presentation, but I will also put my email address in our chat. So today, just going to give some updates on a couple things that are being discussed or considered for this year. The first one probably looks familiar to many of you. We spoke about this last year quite a bit. There's a concept within the Division of Financial Regulation here in Oregon to develop and implement an annual report for the P&C industry. This is really intended to focus on capturing some details, more granular details on claims information, policies and stuff of that sort. When I say granular, I mean more precise geographic information for the state of Oregon. Last year, we had some great chats and received lots of great feedback from a number of insurance companies. We are still discussing this. There's some conversations going on internally. We want to make sure when we do proceed with this that we do it appropriately. So we're just making sure we've got it all squared away. Next item on my list is an earthquake data call. So this is a data call that's been issued by the division in the past. The last time it was conducted was in 2018. It was also conducted, I believe, in 2014. So there are those on this call who may be familiar with that. We are looking at potentially issuing this data call again in 2023. We don't really anticipate any significant changes to the inquiry, the information that we're going to be asking about. More information will come as far as the timeline goes. And once again, we will make sure to engage with all of you and share, what we're planning to do. So those are the updates I have. Again, happy to take any questions or feel free to send me an email. Thank you.
Any questions at this time for Spencer? Seeing none or hearing none, I will turn to Brian Fordham for a FEMA update.
Hello, everybody. This has been an ongoing conversation. I've committed to this group to keep you all up to date on the duplication of benefits efforts with FEMA. And before I begin talking about this slide, this is kind of more of a primer for those who perhaps may have not participated in prior calls, or for those for whom this might be new information. And so, as you all recall, we had our 2020 wildfires. In December of that year, we released a data call. We learned that more than 15,000 claims had been filed. Close to about $1 billion had been lost. ODOT, the Department of Transportation, along with the Office of Emergency Management, were tasked with leading an effort at coordinating debris removal from across the state. There were two steps to this debris removal process. One was to remove what was known as household hazardous waste, and the second was to remove what was known as ash and trash. The EPA cleared hazardous waste dangerous to the public, or the household hazardous waste, and that was completed in early December of 2020. Step two, the state hired contractors to remove what was called the ash and trash. That was completed in the summer of 2021, and approximately 3,000 lots were cleared and 91,000 hazardous trees were removed. I just took my son up to the snow this last weekend, and if you drive through Detroit and Gates and Idana and that entire route over the summer of the last couple of years, they were cutting down trees, and it's remarkable the number of stumps you can see. It truly is. Approximately 158,000 tons of ash and debris were removed. And so I tell you that because we're now at the point where we have to reconcile ensuring that the benefits that we received as a state and how we use that for debris removal doesn't duplicate with the benefits that were available to policyholders on insurance policies. And so this slide outlines that the state of Oregon covered all the upfront costs available required for the debris removal. And this is specific to step 2 on the ash and trash. The Federal Stafford Act requires that federal agencies avoid situations where disaster assistance recipients receive financial assistance or from any programs from insurance or other sources. So you can't get duplicate benefits. FEMA requires that we, the state, ensure that the duplication of insurance funds paid, there is no duplication of insurance funds paid directly to property owners. And a duplication would occur if a property owner participated in the state's cleanup and also received debris removal proceeds from an insurance benefit. So in exchange for us accepting the FEMA funds, we have to engage in this process to ensure that no duplication exists. Michael, can you go on to the next slide? So because ODOT administered the contract for debris removal, they've been charged with managing the vendor and the process to comply with FEMA's requirement to ensure that there's been no duplication of benefits. Tricia and myself from here and Jason Horton from DFR have worked closely with ODOT in the development of the RFP for the vendor who was ultimately selected for the project. We've also have dedicated resources from our advocacy and outreach section as well as from communications to assist in the development of key materials that the vendor is using as they communicate in this process to those who accepted FEMA funding for the ash and trash removal. We began working on the contract in November, and we're targeting March for the push of communication to consumers. The objectives in these communications include creating touch points to inform property owners about the FEMA requirement and our state's expectation to comply with those requirements. So namely, answering the who, what, and why behind the project. Communications are really going to take a trauma-informed strategy and approach to help engage property owners by recognizing the impact the loss has had on them. As I said, Tricia and myself and Jason are all reviewing draft communications as they're being developed so that we can bring insurance expertise to the project. I have to share with you, we're getting the drafts. We're making, the red line versions that we're sending back there's a lot of red ink on them, and much of the time it's primarily reconciling the vendor's experience in other jurisdictions and making them fit to Oregon. And so, there is a huge benefit here. So the vendor that we've selected has got quite a bit of experience doing this in other jurisdictions, which is a huge benefit. And it's also an opportunity for us to make sure that we're getting this Oregonized so that we are approaching our Oregon consumers with Oregon law in the way that's going to make sense to them. I've reached out to a couple of insurers. The information that you've provided to me has been very helpful. I very much appreciate your input. And I just want to give you a heads up. Some of the things that we've committed to doing is that when we communicate to you, the insurer, we will be copying that correspondence and communication to the policyholder so that they understand what's occurring. Many national insurers who are on the call today, this is not going to be new to you. You've done this process before in other jurisdictions, I am certain. And so you probably already have an internal playbook of how to approach this. What we're trying to do is make this as transparent and easy as possible, recognizing for our policyholders in Oregon, this will be the first time and perhaps only time that they will have undergone something like this. So all of our communications are taking that approach. So that's the information that I have for you today. I think, as somebody previously had alluded to, slide 19 contains all of our contact information. I think everybody on the call here today knows how to get a hold of me. If you want to have a direct conversation with me, please feel free to reach out to me. This is really important that we get this communication right, and that if you have any questions, I'm here and available to talk to you. Are there any comments or questions that we can address right now today?
Kenton, looks like you have a question.
Go ahead.
Yes. Do you think the division will do any sort of public-facing outreach beyond communicating directly with affected policyholders? So I'm thinking about.
Go ahead.
Sorry, go ahead.
I don't know that we will, but I will tell you that there is quite an advertising budget that's going to be deployed by both the vendor and ODOT. And so there's going to be communications. I know that there's an ad budget to be doing things like doing mailers, e-blasts, so that the information is put out there in the public realm. And so we might be doing some as well. I think I need to talk to communications about that, but I know that there is a budget, and I know that there will be outgoing messages and information.
Thank you.
Mm-hmm.
Any other questions for Brian at this time?
Okay. Raven, I think you're going to talk about cover perils and proximate cause on wildfires.
All right, thanks. Hello again. So very briefly, the doctrine of proximate cause, which looks back to the cause that started a chain of events, has been discussed in Oregon case law, mainly pertaining to motor vehicle accident scenarios. But the proximate cause doctrine has been applied under circumstances in which two or more identifiable causes, at least one of which is covered under an insurance policy, and at least one of which is excluded, contribute to a single loss. If the cause which is determined to have set the chain of events in motion, the proximate cause, is covered under the terms of the policy, then the loss will likewise be covered. If facts establish that a wildfire or any covered peril is the proximate cause of another event, like a mudslide or a mud flow, things like that, then an exclusion specific to mudslides and mud flows then would not be enforceable. So this is just a reminder that before denying any claims, insurers should very carefully consider all of the facts and circumstances and conduct a thorough investigation. It is also worth noting at this point that our consumer advocacy team has not received any complaints about this. So this is just a reminder because of some issues that we've heard about in other states. So any questions on that? If not, I'll pass it over to Matthew Newell. Thanks, everybody.
Hey, everybody. Good afternoon. My name is Matthew Newell, and I am the compliance analyst for Property and Casualty. Just have a couple areas that I wanted to go over for all insurers. The first one is responses to inquiries. You'll have noticed that we've had this over the last couple meetings. And while responses to market analysis in general have been very good and mostly what we'd like to draw attention to is the responses to consumer advocacy. And we just want to remind all the insurers that when consumer advocacy sends out an inquiry, it's specific to the director's request, and just that you treat those the same, that they're responded to timely, responded to accurately. Previously, we had a lot of responses coming back with a bunch of information about the claim, but not actually answering any of the questions. So it'd be nice if everyone just took some time with those responses and reviewed them before they're being sent out to consumer advocacy, market analysis, examinations, et cetera. Just kind of like a review of that process would be great. Moving on to total loss. We've had a lot of issues with total loss across the board. The reason I'm bringing up the use of third-party products is in two parts. We noticed that certain companies like Autodex and CCC1 sell a separate product that calculate the total loss, taxes and fees, et cetera, for insurers. The one thing that we've been coming across that is a problem with that is that it's a great product. However, it's still up to the adjuster to enter the information correctly. So one of the things we've noticed, which I'll be hitting on in my last part here of internal audits and compliance, is that again, it's up to the insurers to create some type of internal controls in this area to review how the processes are getting done. Just because you have a third party doing the work and getting the tax rates for you and the fee totals for you, they still need to be reviewed so that they're accurate and not missing anything. This has come up of late because of the 3 counties that have higher registration or title fees. And so across the board, we've noticed that those tend to be getting missed when calculating total loss. And now segue into the internal audits and compliance. So some of the complaints that we've been receiving and have been referred to market analysis tend to deal with claims handling. And in most of these cases, we've started to, at least me personally, have started to move a little bit away from looking at the claims right away and looking at what type of internal controls and internal review procedures each insurer has. So some insurers that we looked at, they have reviews monthly with the adjusters, or they have manager review or supervisor review, and then they also have a quality assurance team that does random reviews. What I'm going to tell you is that while these are great to have, we'll be looking to see if there's any trends that are getting noted by the insurers and that they're being corrected swiftly. Case in point, if we were to review 12 months of internal audit reviews and notice that the same error is happening for 9 months out of 12, we'd have questions about that. So this is just kind of a reminder for all insurers to, while we know that you have these procedures and probably a lot of these in place right now, just to maybe look over them and make sure they're being implemented properly. And it's always a good time to check. Like Spencer alluded to, our contact information is down at the end of this PowerPoint presentation. If you have any questions about stuff that's happening in market analysis or market conduct, feel free to contact us at any time. We're here to answer any questions. We like it. Also, I'll mention that it's okay to self-report. Last time I had mentioned self-reporting, we did have some people contact the division and let us know that, you know, there could possibly be issues. And while it could be a problem, we love that you're proactive and trying to make sure that the customers are taken care of, or the insureds. So that's all I have. If you have any questions, I'm here to answer them for you. Oh, I will add one more thing. Along with the total loss and third-party products, I want to let some of the insurers know that if they are using a third-party administrator to administrate some of the total loss claims, we've noticed that the TPAs have also had some issues with properly adjusting the claims. So we will also be looking into seeing how the insurer is reviewing the work of the third-party administrator. So just more information for you. Any questions?
Any questions for Matt at this time?
All right, thank you.
And next we will go to Anna Pace for a market conduct update.
Thank you, Michael and Matthew. Good afternoon. My name is Anna Pace, and today I am going to be sharing with all of you an update on behalf of the Market Conduct Program. As we had previously discussed when we began having these industry meetings, we had actually shared that we were conducting market conduct exams for Oregon domestics. And I'm pleased to let you all know that the expected completion for these exams is scheduled to end in the first quarter of 2023. And also, we wanted to invite folks to actually be able to take a look at the finalized reports, meaning those for which appeals have actually expired. Those are posted on our website, and you may actually use the link that is provided in the presentation to take a look at them. So with that being said, the program is actually going to begin exams of national companies during the remainder of 2023. And we're actually currently determining the national companies that we are going to be examining. And the scope of the exams, though, it is going to remain the same, meaning compliance with the implementation of the codification of House Bill 3272, including, of course, ensuring that the updates from insurance carriers were actually filed and completed. In addition, compliance with the DFR that was issued back in September 18 of 2020 as a result of the emergency order after the wildfires. And the other thing is to verify whether or not there were premium increases as well as cancellations or non-renewals that happened solely due to wildfire claims. So with that being said, once that we determine the companies that we're going to be examining, we're going to be coordinating with those companies, so you will be hearing more from us. May I clarify or provide any answers? Also, if you cannot think of any, at the bottom of my slide, there is actually our email address for our program. So any questions you can come up with that pertain to market conduct, you can go ahead and let us know. Thank you.
Any questions for Anna at this time?
Thank you.
Hearing none and seeing none, I will turn to our next topic, which is going to be arbitration. And I am going to give a brief update on some trends we've noticed with arbitration language. Again, my name is Michael Drummonds. I'm a rates and forms analyst in the property and casualty section, and I've been in this role for 18 months as of tomorrow. I want to start by saying that arbitration, this topic is really not new territory. What do I mean by that? Well, this has been an active area of discussion in our department and divisions since the 1990s. So this really is not new territory by any means. Our position is reflected in our bulletin, DFR 2020-1, signed by our Director and Insurance Commissioner, Andrew Stolfi. And our position on arbitration is also well reflected in the various lines of insurance and our product standards. So each line of insurance, we have our product standards set, and it's a rather uniform expectation that's communicated across all lines of property and casualty. One trend that I have noticed in recent months is that insurers will often mandate either a process of arbitration or an entity to administer arbitration. I'll elaborate on both. We'll often see some language that any dispute under this policy has to be settled through binding arbitration. Any language that indicates a process, whether it's arbitration, mediation, or going through the Oregon courts or whatever the forum is, any process that's mandated at the contract formation stage, that's going to result in objections from us when we see that. The reason being that will limit the policyholder's options, and we've taken a position in our bulletin that says there really cannot be any mandated process at the contract formation stage. We also are seeing a lot of forms talking about a specific entity administering any mutually agreed on arbitration disputes. And the most common one that I've been seeing in recent months is the American Arbitration Association. And you know, again, at the contract formation stage, they're not supposed to be mandated entities or any mandated process. As far as what our general expectations are, I'm just going to briefly just go over those just as a reminder. For some of you on this call, this is going to be old news. For some, this may be new. So I'll take questions once I'm finished. So our expectation is that Oregon be the governing law. So we tend to see some references to federal law or the rules of the American Arbitration Association. Oregon products, our expectation, Oregon law is going to be the governing law. And we really do want to see mutual agreement at the time of the dispute reflected in the policy. In the past, there's been some questions on whether that the language expressly says mutual agreement or whether it effectively communicates mutual agreement. If we have any doubt whatsoever that the policy emphasizes mutual agreement, we are likely to object and ask for further clarification. Any mutually agreed on arbitrations are supposed to take place in the policyholder's Oregon County of Residence or another mutually agreed on location. We also sometimes are seeing some limitations on the policyholder's ability to go to a jury trial, and that also is going to be subject to objections when we see that language. However, we do want to clarify that the insurers are allowed to restrict participation in class action lawsuits. I think that's probably about enough on that. I will take any questions that anybody has this time. Kenton, I think you have your hand raised.
Just to clarify, I think you said this pretty clearly, but I want to make sure I've clarified it. These are not new positions by the division, and so insurers should not be surprised to learn these requirements and expectations of the division. Is that correct?
Correct. I mean, it's been an ongoing discussion since the 90s. I guess you could say our bulletin has not been since the 90s. Our bulletin's been since 2020. But yeah, we have had rather consistent expectations laid out in the product standards over the years, pretty consistently. Does that mean that every word has been the same? No, of course not. But yes, this is more or less not new territory. And if there are any questions about that, feel free to email me. I'm happy to look at language before it's submitted in SURF. Historically, that's always been a good way to resolve any uncertainties about whether any language you want to use will work with us or not.
Thank you.
At this time, I will go ahead and turn to Jan Vitus, who will provide an update on cancellation of commercial package policies.
Hello, this is Jan Vitus, and I've been with the division since 1996, so I've seen a lot of these issues that are being presented to you today and been involved in the development of product standards since before we went on to SURF, but very definitely since we went into the SURF system, because that's what drives all the filings there are the information that's contained in our published product standards checklists. So one of the things that we've dealt with over time is cancellation of commercial package policies. And the division has been requiring the use of 30 days for any other reason, regardless of the 10 working day piece. And the reason for that is because if there's property included in the policy, they need more time to replace their property coverage. And so what we've done is provide more consumer protection. And in discussions with our AG, as long as it's been published and it's been our position all along and it's not anything that we're doing different, he believes that we've already got the administrative rule that says insurers have to comply with whatever in the product standards. So what we've done, just to more formalize and strengthen that position, is develop an administrative order. And so if you go out on the DFR website and you use the search box that's up in the upper right-hand corner and you put in ID space 7-2022 and then hit search, it'll pop right up. And that is the modification to the existing administrative rule number 836-085-0055. I will tell you after this was published, we started looking at other situations that came up, and there are some other administrative rules that also need to be updated so that everything is consistent. So 836-085-0025 is an example of another one out there that's going to get updated so that it matches up with what happened with the change to 0055. And it just simply right now with the legislative session going on, this particular rule updating is going to be on the calendar, but it probably won't happen in the next few weeks because they just have an awful lot on their calendar. But we wanted you to know if it's a commercial package product of any sort, then it's going to be 10 working days for non-payment of premium and 30 days for any other permitted reason. And when it says permitted reason, when you look at 742.702, it actually has a listing of permitted reasons for cancellation. And when you look at 742.706, that's where it talks about non-renewal or renewal on altered terms. And so it's just providing that consistent basis. If you're looking at like a homeowner's policy, it's going to be a 10-day cancellation for non-payment of premium and 30 days for any other reason. And these things are all reflected in our product standards 440-3618, which is published both on our website and in SURF. So it's easy to go out and look at the language. We've updated those product standards. We started doing it like November of 21, and then we did 2 more updates. And there's going to be some updates coming through on the product standards to add in this ID 7-2022 as an additional reference. And so you can expect to see those sometime in the next couple of months. But we will be doing some updates. I think part of it is we kind of want to see what happens with this legislative session and see if there's something else that comes out of the session that we also need to do updating for. So to just keep throwing out new product standards on one item when we can maybe modify to catch a number of items, we'd like to try to make them as useful for you as we can. Kenton, I see your hand is raised. Is there something I could answer for you at this point?
Sorry, no, I forgot to take it down. I'll take it down now. Thanks, Jen.
Okay, you're welcome. The other subject that I was going to discuss has to do with the e-notification process. We do a customer satisfaction survey, and one of the questions on it is whether people use e-notification so they can find out about changes that are going on. And more than 50% of the time, we get the response, I don't know anything about that. If you go out on our website, and we've provided you the link on the screen there, and you click on email updates, it's one of the links across the top of the page, email updates. You click on that, it allows you to go out and register individually from your own computer and tell the system what you want to know about. If you want to get a message every time there's a new bulletin, anytime there's a new administrative rule, anytime there's legislative activity, there's a whole list of things that you can choose from that you personally would like to get more information about. And in particular, if you're working with making filings and trying to keep up with all of the stuff that goes on here administratively as there's new information about forms and rules and rates and all of that, having e-notify is a wonderful resource. I use it. I'm linked into it. I get those messages up on my computer, as do other staff in DFR. So it isn't just for industry to use. It's for anybody who wants to do that, wants to get that information. It's all public information. So, you know, Kenton can go out and sign up for e-notify for email updates, just like John Powell or me or any of the people from out there in industry. It's all available, and we just encourage you to please go out and check that out, because we'd like to see maybe the percentage of people who know about it be better than it being less than 50% of the people having any idea that it even exists. Any questions about that? The next person that I'm going to hand this over to is Carolyn Calvin. She's going to talk about product standards and updates and some activity that's going on currently. Carolyn.
Thank you, Jan. Good afternoon. I'm Carolyn Calb, a new rates and forms analyst in the property and casualty section. Today, I just briefly wanted to share that we're in the process of developing product standards for portable electronics to provide guidance for these types of filings. And historically, we've found that insurers who carefully review the product standards typically tend to have fewer objections. So that's it for my part. It was brief. If there's any questions? Turn it over to Michael. Thank you.
Thank you, Carolyn. And by the way, I went ahead and put a link in the chat for the e-notification delivery that Jan was referring to. I want to give a brief update on Paid Leave Oregon. And the reason I want to mention this at the property and casualty meeting is because you do have the option of filing Paid Leave Oregon as property and casualty or as health insurance. So I actually have the health insurance TOI and sub-TOI code on the screen, as well as the P&C option, the type of insurance and subtype listed there. Currently, there are 17 filings that have been submitted to us for Paid Leave Oregon, 4 of which have been approved, 13 remain pending. And insurers submitting filing revisions or additions to previously approved Paid Leave Oregon filings must use the SURF coding for Paid Leave Oregon. And I mentioned this also because there could easily be some health insurers on the line who've already filed Paid Leave Oregon. As a reminder, you could file it as property and casualty or as health insurance. So far, all of them have been health, but I did want to formally remind everyone that you do have the option to file Paid Leave Oregon as property and casualty in the state of Oregon, I should say. Any questions on that? Hearing none, I will turn it over to our contacts page and leave the slide on our contacts page if anyone does have any questions. We do have 5 minutes today, made very good timing, so we'll take any questions and we'll leave the contacts slide on the screen.
Well, this group is being suspiciously quiet. John, I knew somebody would have a question. Hit me, John. What do you got?
Couldn't find the mute button. Thank you for being so thorough. Is it possible to get a printed agenda? And there may have been one and I missed it prior to the meeting. I have besides my age, my desk is so crowded with paper and information. It's just difficult to anticipate what's coming up and how quickly we can assimilate all the information. And I just thought, if it's possible, and I know you're all busy, trust me, I know. But if it's possible, it would be helpful.
John, that's a good point. We emailed it out on Monday, but something else that we can do is we can post it on our website as well. So should we have missed somebody in the email distribution list, then it would still be public anyway. That way, then you'd be able to have a second spot to get it.
Okay.
So that's a good reminder. Thank you.
Thank you.
Yeah.
And I'll just add briefly that if anyone, for whatever reason, maybe has a hard time opening any attachments that we send out, I'm happy to email people individually on those kind of things too. So always feel free to email me individually, and I will get the item over to you.
Jennifer?
Just to kind of add on to John's ask, if you guys could also maybe, and I think you might always do this, but send the deck out to everybody afterwards.
Yeah, we will be doing that, and we'll also
Okay,
be
thank you.
posting it on our website as well as the recording when we get it completed. Yep.
Perfect. I thought you did. I just wanted to make sure. Thank you so much.
Yeah, no worries. Absolutely. Thank you. Okay. Well, thank you everybody for participating today, and thank you for my team for assembling this presentation. There's a lot of work that goes into this. And again, I think that we have our contacts up on the screen right now. So if you have any questions, please feel free to reach out to any of us on that page or myself directly, and we'll be more than happy to take your question or feedback. Thank you again, and we look forward to seeing you next quarter. Michael's going to set up a recurring meeting so that we get these on everyone's calendar for the balance of the year. That way it'll make it much easier for everybody to plan around these. Again, thank you everybody for your participation today, and I hope you have a great rest of your week. Talk to you all later. Bye-bye.
Thank you.